Continued drama surrounding the Greek debt crisis, concerns about a Chinese recession, and uncertainty around a Federal Reserve interest rate hike all took their toll on investor sentiment and caused extreme volatility in the U.S. as well as international financial markets in the month of August. Greece finally arrived at a compromise with its European creditors that resolved its debt crisis, at least for the moment. The deal gives Greece another bailout while instituting some of the reforms that creditors wanted to see. However, due to national Greek elections in September, we fully expect to see a fresh round of drama in the near future. Once again, China took center stage in mid-August when its central bank unexpectedly devalued its currency. Later in the month, markets worldwide plummeted when reports showed that China's economy may be heading toward a recession. Now, China is the world's second largest economy and has accounted for a significant percentage of global economic growth in recent years. Will China slip into a recession? We can't say for sure yet, although some economists believe that China's central government is not prepared to do what's necessary to avoid a recession. While exports to China only account for 0.7% of the GDP for the United States, a recession in China could be a major drag on the global economy. Unfortunately, most of U.S. growth is driven by what we consume here at home, giving us somewhat of a shield against economic issues overseas. While some U.S. companies that sell a lot of goods in China may feel the pinch by a Chinese slowdown, we believe that fundamentals are looking positive for the U.S. economy as a whole. Now, even if China does slip into a recession, it's definitely not going to be the end of the world. Domestically, the economic picture looks a lot brighter. The second estimate of U.S. gross domestic product showed that the economy grew at 3.7% last quarter instead of the 2.3% originally thought. That's great news after the dismal growth of the economy experienced at the start of the year. Consumer spending, the biggest contributor to U.S. economic growth, it also grew substantially in July. Now, hopefully cheaper gasoline, a stronger labor market, and higher housing prices will continue to support consumer spending in the third quarter. So let's recap here. While the broad global economic picture looks messy, U.S. fundamentals are looking positive. We're keeping a close eye on global events and we'll update our clients as necessary. Though pullbacks and periods of volatility can be stressful, they can also provide great opportunities for savvy investors. As financial professionals, it's a big part of our job to help our clients stay disciplined and stick to their financial plan when things seem bleak. That's it for the August economic update. Please remember that nothing we talk about here is a recommendation. As always, if you have any questions or concerns about what we've discussed, or if you'd like to discuss your personal financial situation, please give us a call at 480-422-8522, and we'd be happy to speak with you.